Hey guys, happy Resurrection Day, happy Easter. Let me make sure you guys can hear me. Sorry, before we start, it is Sunday. Let me see real quick. I just want to check, as always, just check my sound and make sure you guys can hear me before we start. Let me see real quick. I just want to check, as always, just check my all right, so I can hear myself. So as in case you guys watch it back live, it is Easter Sunday or Happy Resurrection Day if you believe in the Resurrection Day. We will be on here early, as you guys can see. We won't be on here later on the day. So if you are not able to join us this morning, you can watch us on the replay, and we're going to jump right into it. We're not going to stay too long. We're going to talk about the whole HOA situation or new bill that was passed and it actually comes into effect January 1st, 2027. So if anyone is purchasing an HOA, currently lives in an HOA, they have put more guidelines in place for HOAs to help hopefully property owners, but also constrain HOAs as far as any type of fraudulent action. All right, so let's jump into it before we start. Again, happy Resurrection Sunday. If you're new to the channel, don't forget to subscribe to the channel, like the channel, hit that hype button if it's on a replay, the shooting star underneath of the video as well if you see it. And then comment if you're here on the live chat and you want to join in discussion today. And also, I always forget to say this, I am a local realtor in the Metro Atlanta area. However, I can help you guys if you need referrals anywhere else throughout the world. So just reach out to me and I can try my best to get you connected with someone if you need help. And I appreciate everyone who reaches out to me. And I'm doing my best to make sure I respond accordingly. All right, so let's jump into it. First, as you guys know, as usual, I always like to just put out there the mortgage rates real quick. So we'll do the mortgage rates real quick. So let me make sure you guys can see it because on my end, I can see it. So if you are currently in the midst of trying to purchase a home, this is average nationally. So it does not mean that your rate will be here. It might be up, it might be down, it might be here. But this is what we're looking at. And according to Mortgage News Daily, as far as interest rates currently, we are seeing 6.5% conventional, 30-year fixed, 15-year fixed 6.02, jumbo 6.60, ARM is 6.05, FHA has gone down back to 5.91, and the VA is back to 5.93. As you can see, the plus and the reds, all the reds saying that it jumped again. However, it went down from where it was at, if you guys remember on the last live that we did. So they went back under. So we'll see what happens as we move forward. I see my dad comment. He said, hello, everyone. I'm like, you, for some reason, it's showing that you commented on the video, but not in the live stream. So it came up on my video, but not the live stream. So, but thanks for being here. And let's jump into now this video about HOAs in Georgia, so you guys can see what's going on, and then we'll jump into more information about HOAs. I know you guys, some people love HOAs, some people don't, but let's see what they're stating here.
Homeowners associations in Georgia may soon have to answer to a state oversight office. A bill to rein in what legislatures call HOA abuse of power passed the Senate today. It addresses many of the issues uncovered in Anastasia Olmos's investigative series, HOA Nightmares.
One thing is clear from the stories that we've covered in the last year, from all of the communities that we've been in to the Senate floor vote today, Georgia homeowners need oversight of their HOAs. For years, HOA bills in Georgia never even made it to the Senate floor for a vote. Today, SB 406 not only passed, it passed unanimously. In our own survey of 200 homeowners experiencing issues with their HOAs, we found they owe an average of more than $8,000 for things like not power washing their home or having dull shutters. Many are in lawsuits with liens on their homes and no way to afford a lawyer. In short, this bill would assign HOA oversight to the Secretary of State, including enforcement powers, create a 5-person state board to review complaints and hold hearings, require HOAs to keep 10 years of financial records and provide the previous year to the state, raise the foreclosure threshold from $2,000 to $4,000 in unpaid dues, not fines and fees. Program funding would come from an annual registration fee of $100 per association. And we spoke with the bill's sponsor, Senator Matt Brass, right after the vote. Your initial reaction?
Excited. Sorry, a lot of work went into that. Senator Donzella James started working on this 5 years ago. She brought me in about 3 years ago by sending some constituents to me. And I just think everybody out there needs to know their voices are heard, and we're going to continue fighting for them.
The bill also allows HOAs to opt out of registering, but they would not be able to issue any fines or fees. Now, the next step for this bill to become law would be for it to head over to the House for a final vote. Of course, we will keep you updated. I'm Anastasia Olmos reporting.
So as you guys hear in regards to the bill itself, and as she stated, that was a video that took place about a month ago, but as of now, the bill was sent over to the Senate and everything, and Governor Kemp in the state of Georgia should be signing that, and it should be fully into effect come, again, January 1st, 2027. So let's just touch on a little bit about HOAs in general. Some people like them, some people don't like them, and we'll talk about how they're growing and how people, a lot of people nowadays, when I talk to some home buyers that are trying to buy now, most of them do not want to purchase in an HOA. I'm gonna swing my hat this way because for some reason the lighting is horrible. So you guys can see my face. I don't know. The lighting is horrible. So some people do not like HOAs. Some people like them. They feel like there is a reason for an HOA. Some people feel like I don't want to pay an additional bill on top of what I'm already paying mortgage-wise, especially in this new day and age as far as economy-wise and how these fees keep inflating. So it says homeowner associations continue to grow in prevalence price in 2025. This article was done January 27, 2026 by Joel. The highlights are right there. So we'll get back into it. It says background HOA. Homeowner associations manage and govern residential communities, providing communal amenities and enforcing rules for homeowners in the community who become members when they purchase a home there. Homeowners benefit from access to these things like pools and clubhouses, landscaping and security service, and private roads that are provided by the HOA, but it comes at a price, monthly HOA dues. Affordability is the main constraint in the housing market. It has been for several years. Not only must prospective home buyers contend with high home prices and mortgage rates over 6% beyond principal and interest payments are now homeowners insurance, property taxes, and HOA dues. These ancillary costs of homeownership are straining homeowners in many parts of the country. Last year, they dove into homeowner associations and the stock of homes for sale on Realtor.com. They found that HOAs grew in popularity from 2023 to 2024 and that their monthly obligations grew in cost as well. It is of a little surprise that these trends continue in 2025. National findings. So nationally, they're going to talk about where the HOAs are kind of seen. Typically, there has been more HOAs in condos and townhouses and less in single family homes. However, single family homes are growing as well because of those amenities as stated, the pools, the tennis courts and things, and those roads and sidewalks. It says the share of homes for sale in the U.S. that are subject to a non-zero HOA fee reached 43.6%, up from 41.9% last year and 34.3% in 2019. The median HOA fee was $135, up from $125 last year and $108 in 2019. So right here it says share of listings with HOA fee. Single family homes are green, condos and townhouses are yellow or this orange yellowish type of thing. As you can see here, 2019 there was about 25.8%, and this is nationally. As far as 2019, where the HOAs were at in that single family situation, and then the condos was 76%. And as you can see, it keeps growing on both points. It's growing and growing, growing. It says roughly 1/3, 33.4% of single family homes have HOAs, and more than 4 and 5, 84.8% of condos and townhouses do. Both shares are on the rise. Single family homes subject to HOA fees are bigger and costlier than those without HOAs. With a medium square footage of 306 and a medium price per square foot of $216.76 compared to 1,818 square feet with a price of $205.10. Condos with HOAs are about the same size as those without, but have a higher price per square footage at $276.97 versus $255.35 in 2025. Being subjected to an HOA had little effect on the timely listing spent on the market in aggregate. So my thing in regards to, of course, HOA and condo buildings, I do feel like there needs to be an HOA in a condo building just for the sense of you're in a building, those type of structural things, unless everybody's insurance could cover different things, which they typically can't. So you do need an HOA or some type of policy in that building for like a master insurance policy or something as far as, getting the roofs done and different things like that. As far as allocating the funds, when it comes to those assessments, I think they could allocate a little differently, but we will keep going. It says share of listings with HOA fees. Again, it shows you existing homes versus new construction. As you can see, throughout the years from 2019, they have been on the rise as far as existing homes, but which means to me that if the rise has gone up with existing homes, are the community and themselves, the people that live in the neighborhoods, are they asking for the HOA to come into effect? Or are they asking for management for it to rise with existing homes? It makes me think that they're asking for some type of governance in that community. But right here, as you guys know, new construction, a lot of them are coming now and being built with HOAs already in place. And so it's very interesting. Well, HOAs are more highly concentrated among new builds, which we already know 67.9%, than existing homes at 38.9%. But the share of existing homes with HOAs is growing fast in recent years. The 2020-2022 run up in the share of new construction homes with HOAs, as well as the increase in new construction activity that led to a peak of new construction listings as a share of the market in 2022. As you guys know, builders came back in the market and started building new homes because of the pandemic. People saying that we didn't have enough inventory, X, Y, and Z. So they started building, and when they started building these new construction homes, the HOAs were implemented for as far as when the developer started the building. Has started to make its way into existing new market in 2023. The median listing price of new homes with HOAs is about the same as the median listing price of new home builds without them. But among existing homes, the median price for a home with an HOA is $450,000 compared to $900,000 without. So they're saying that the homes that are homes more costly are having HOAs, which create additional fees outside of course, property taxes, outside of course, home insurance. But they're saying homes that didn't have HOAs, preferably some of these homes were built back in the day. Of course, we get some people nowadays finding empty lots, building single family homes on empty lots that doesn't come with an HOA. But they're saying those homes are usually cheaper than the newer ones being built that are more costly, and then adding in those additional HOA fees makes your mortgage even more expensive. To be sure, the age of these homes isn't a major factor. The average existing home with an HOA was built in 1998, while the average existing home without an HOA was built in 1968. And as you guys know, most homes, older homes per se, were built back in the day, possibly didn't have HOA, or they didn't come with HOAs, right? They were built in traditional communities. They weren't really built in subdivisions. They were just built in communities, and some of these communities might not have a sidewalk. But they just have the plot of land, the road, the houses built there. And like I said, we are getting some people, smaller builders or independent builders, who are finding those empty lots and building neighborhoods without HOAs. But some of these neighborhoods, again, might not come with those sidewalks and those amenities, pools, and different things like that. Hey, what's going on, Croy? Thanks for joining. Happy Resurrection Day, happy Easter, however you celebrate it. Clark, wow, didn't know you were going live. How are you? Is this a topic I have many questions on? Thanks. Yeah, I'm doing good. I'm going to actually head out later on to a Easter dinner, so I figured I'll go live now. And then the portion where we hit more into Georgia and the new law with HOA, I'm going to cut that out and make it a separate video. So you guys, if you want to, you can rewatch that part of it, which I'm gonna edit out. But if not, I'm gonna say everything on this live. But this is a topic I have many questions on. Yeah, just ask away if you have any questions. Chime in the chat, whatever you feel. Hopefully you're doing well as well. I hope everything is going good in Florida for you. But yep, just came earlier just because I won't be on here later on. State by state breakdown. So they're breaking down the HOA. It says Nevada leads all states in the District of Columbia, Washington, D.C., in terms of the share of listings subject to an HOA with 68.3%. The fewest HOAs is in South Dakota, where the 2025 share was just 12.3%. Nevada has a high share of both new construction and condo listings, while there are relatively few condos in South Dakota. Geographically, the West and the South are home to more homeowner associations, are also the bigger gainers in HOA share since the pandemic. Of course, we know because these areas, they built more construction, as it says right here, more new construction came those HOAs. So right here it says the share for sale listing subject to HOA in 2025. So you get the darker blue is where the higher share HOAs is. This lighter type of teal green is where you're getting the lower share. So if you could see on this map of the United States, you have, of course, Nevada right here with a higher share, 68.3%. You have Arizona at 65.1%. You have Florida at 64.6%. You have North Carolina at 55%. I'm in Georgia. We're at 45.5%. I'm not sure where everybody is at. So you can definitely, look into this article. And what I'll do too, which I need to start doing, I'll share these article links inside the notes on the side of the caption. So if you want to click on it and do more investigating yourself, you can. But Alaska, 21%. So then you have up here where it says Delaware 63.8%. So you can hit these things and see where the most expensive, where the place that has the most HOAs are at. So if you are looking to possibly purchase or relocate, you might want to try to go to a state with less HOAs and find a neighborhood with no HOA. Like where I'm at in Metro Atlanta, I live, if you guys don't know, I live in Cobb County, and the neighborhood I'm in is a mixture of HOAs, non-HOAs, because you have traditionally some of these homes that were built further back in the day, they don't have HOAs, right, built in the 1950s, the 60s, even the 70s, possibly some of them in the 80s. They didn't have an HOA structure kind of in that time point. Like there was HOA, but there wasn't a lot of things that had HOAs. But then you got, of course, as people started building in the 90s, as they stated in 1998, a lot of HOAs started coming more prevalent. Metros with the most expensive HOAs. To find the places in the country where HOAs are most wondrous, we look at the 300 largest metros areas in the country. Choose only those metros that have a share of listings with HOAs that are higher than the national average, 43.6%, and calculate what percentage of the monthly principal and interest payment on the medium home listing in that metro the medium HOA fee for the metro represents. We are looking for places where HOA payments make up the largest chunk of the monthly cost of a home. The top 10 metros with the most expensive HOAs relative to home prices are below. So they're talking about these are the top 10 with the most expensive HOAs. So you have Florida, there's Miami, West Palm Beach. The home is listed at $425, the medium listing of the home, and that HOA comes in around $617 per. I don't know if this is per month or annually. Let me see. Did they say annually or per month? It says large chunk of the monthly cost, so it looks like it must be per month, according to this. So hopefully that's correct. So it's saying right here, the medium around here is about $617 per month. You got Panama City, Florida. So we got a lot of Florida. We have Hawaii. Hawaii, Florida, South Carolina, Myrtle Beach, 225, Florida again, Minnesota, Wisconsin. So we have a lot of those southern Midwestern states as far as that HOA and those costly monthly fees. It says this is an overwhelmingly Florida story. And even though we control for home prices, expensive Florida metros like Miami and Naples end up on the list. So of course they're talking about that. They explain about the HOAs with the Surfside condo situation. Says with HOAs in the Sunshine State paying higher premiums on insurance. In addition, the legislative follow-up to the Surfside condo collapse in 2021 has added pressure on Florida condominium buildings to meet reserve requirements and conduct more intensive inspections. So, of course, reserves, everybody know when you have an HOA, they typically say that it helps to pay for those reserves as far as collection-wise. And with that being, that's what they're saying here, that these condos are asking for more money because they need to put money aside for those reserves in case they have to fix anything as far as, the roofs, any type of structural building things, getting tests done as far as that's needed, any type of certification, certificates, those things that's needed for those HOAs. That's why those reserves are supposed to be in place. But if you guys, a lot of people probably don't do this, and it's kind of hard to do it when you are buying, to try to ask the HOA if they can give you information as far as the financials. What do their financials look like? And then ask them what those reserves are looking like to see if it's at a deficit or if it's, even or if it's above that deficit, right? So you want to kind of get those financials because some people will purchase into HOAs where they're in a deficit. So you want to know that. What's going on, Corey? He says, same here, getting ready to go to church with my sister. I was against HOA, but a townhouse seems like the best option for me right now. However, the HOA nightmares are concerning. Yeah, the HOAs, people are very concerned with HOAs. Like I said, just make sure you get more information about that HOA, understand their financials, understand where they're at as far as those reserves, make sure they're not in the deficit, make sure they are maintaining it and moderating it correctly. Ask those other homeowners, if you're looking at a townhouse in that area, knock on the doors. I always tell people, knock on the doors, ask the homeowners, I just have questions. I'm thinking about purchasing this townhouse in this neighborhood or a single family house in this neighborhood with an HOA. Ask them, how has the HOA been? Have they been experiencing anything? Because typically people who live in these neighborhoods will be honest and transparent about how it's structured and how the HOAs are, right? So ask those questions. But most, again, townhouses and condos have HOAs. How you doing, Lisa? List with Lala. I said Lisa, sorry. List with Lala. How you doing, Lala? Thanks for joining. I appreciate you stopping over here. She said 100. Hopefully you are subscribed to the channel. If not, please subscribe and like the video if possible. And let me know your, because I'm guessing you are an agent because it says List with Lala. Let me know what you're experiencing and where you're located and what you're experiencing as far as HOAs in your market. All right, and again, happy Resurrection Sunday and Easter Sunday if you're joining me today. So this basically just sums up everything as far as methodology, sorry, in regards to those HOAs. So we'll jump out of that, and then we'll head over to the cost real quick as far as what they're saying that for those HOAs real quick. We won't spend that much time on this either. So this is kind of breaking down the HOA fees a little bit more. It says HOA surpass $500 a month for millions, and 82% say costs are rising. It says a home shopper may crunch the numbers to make sure the mortgage fits their budgets, only to encounter the fine print an additional $400 or even $500 a month in homeowner association fees. And of course, we know that cost can be a difference. So like when I was helping, well, as I helped several different home buyers, and with them having typically a lower, if they might have a lower budget, they might be right at that fine line as far as that monthly cost when they're talking to their lender, and that HOA might throw them a little over if it's too costly, right? So we have to find a way to bring down those HOA prices if possible. Let's go across. So across the 100 U.S. metros, 17.5 million homeowners, nearly 1 in 3, paid HOA condo fees in 2024, and 2.6 million of them, those dues ran at least $500 a month, adding up to $6,000 or more each year on top of a mortgage, property taxes, and insurance. And I don't know if you guys heard me talk about this before. There was a homeowner that I was trying to help, and their HOA fee was monthly was about $850 something, and now they're at $1,082 a month. And this is in a condo building in Metro Atlanta. So not every condo is $1,000 something a month, but these fees are high. I typically see in our area, Metro Atlanta, I'm seeing most most townhouses and condos, I would say, kind of coming around high twos. I'm seeing a lot of them kind of hitting that four mark monthly with those HOA fees, and because of that, those listings are sitting longer on the market because of those additional higher HOA fees. All right, so let's go down here. It says New York tops the list with over half, 53.4% of HOA paying homeowners owing monthly of $500 or more, followed by Honolulu, 52.4%, and Miami, 39.5%. All right, it says HOA fees are most common in Las Vegas, Orlando, Florida, and Houston. And in Vegas, 60.9% of homeowners pay HOA or condo fees. It says separately, our survey finds that HOA fees are rising and are more common in higher earners. So people who are making a little bit more money, I guess they said they feel like they're comfortable paying those monthly HOA dues. All right, so let's skip down here. It says 31.8% homeowners in the biggest metros pay HOA fees. As we know, we kind of touched on a little bit, touched about New York, so we don't want to get into that no more. We don't want to read the same thing over. These are the areas where HOA fees are most commonly to exceed $500 a month. So these areas is where you're going to see these HOAs exceeding more than $500 a month. They have New York, Massachusetts, Connecticut, Florida, Honolulu, Hawaii, I should say, and California. So they're saying these areas you're going to see a more costlier HOA a month as they run down the list. And these are some of the laid out cities over here for you guys to look at it according to Lending Tree. Okay, Schultz right here, he's a home shopper. It says, he said, when people consider how much they can afford as far as home wise, they're generally thinking about how big of a monthly payment they're comfortable taking on. He says the total loan amount and the interest rate are primary factors to consider. But if you don't also take into account HOA fees, private mortgage insurance, which is your PMI, and other costs that typically are part of your monthly payment, that's a recipe for trouble. Of course, your PMI, that private mortgage insurance that comes with a conventional loan, if you pay less than 20% down. So if you pay more than 20%, you will wipe out that PMI. If you're using FHA, those government-backed loans, you will see yourself with an MIP, which is mortgage insurance premium. And that'll be added on with that FHA. It says, on the other end of the list, less than 2% of homeowners and HOAs and 2 Utah metros, Provo and Ogaden, I guess I'm saying it right, and Albuquerque, New Mexico, pay fees of $500 or more a month. Okay, it says, meanwhile, median monthly HOA fees are highest in New York, which we know, Honolulu, Connecticut. And again, they break it down right here as far as those to exceed those monthlies. And these are the metros as far as the mediums. Again, talking about the same monthlies. HOA fees are common in Las Vegas, as we stated earlier. So this is kind of just runs down the HOA fees, where you will see those HOA fees, those higher fees, what people are paying and things like that. So again, I'm going to try to make sure I put those in the show notes. So if you guys want to go further into depth with that, we'll click on that. All right. So now let's get into the last part of this live today. And that is in regards to Georgia's new bill, which is the SB 406. I believe I'm saying it right. The 406 SB. And it's a bill. I'm going to run through it. I'm going to try to, because it is lengthy. So I don't know if you guys just want to sit here and hear me read this, but I'm going to read it. And we're going to skip some parts and we'll summarize some things. What Croy said. For me, it's not so much the HOA fee, but the unchecked power that HOA has to levy fines and even take a property for minor infractions. I agree. I feel like a lot of people, that's their biggest thing now, as far as these HOA putting fines on you for ridiculous things, like if your mailbox is leaning left or right, if you decide to paint your house a certain color, but you didn't talk to the architectural part of that HOA, then you have to put it back this way. Like they kind of tell you how you have to structure stuff or put stuff in place. I even seen a report where some lady said she kept getting fines or like these minor infractions because her garage door was open, and they were like, they don't want your garage door open. So yeah, I totally understand. And that's why you have to just kind of look into the state that you're buying in as well. And it's Googleable. Just Google, put like any bills in X, Y, Z state for HOAs and read through the bill, understand the bill. If you don't understand it, send it over to a lawyer if you have accessibility to one without maybe having to pay so much for them to make it summarized for you. Or nowadays, you can really just take the bill and throw it in ChatGPT, and then ChatGPT can summarize it. That's what I actually should have did for this bill. Let me see, so I don't keep you guys here the whole time. Let me see if I can highlight this whole bill and actually put it in ChatGPT for it to summarize it for us. So then that way I'm not reading the whole bill to y'all, but maybe I should have did this earlier. But I would say that would be the best thing to do, just because if you want to avoid some of those things in regards to like the HOA. But that's the thing. And then, like I said, just making sure their financials are together. What I'm noticing is a lot of these HOAs, their financials are not together. A lot of people are buying into them. And then when they buy into them, they find out that these HOAs are in a deficit. And because of that deficit is occurring, is either one, it's going to be a special assessment, or two, that HOA monthly cost is going to go up eventually, whether it be after you purchase a year later, or whether it be right after you purchase, I should say. You might see that go up. So you just want to get more knowledge about that. And like you said, read those covenants, read those bylaws, understand what they are taken care of, what they're going to hit you with as far as fines, any type of things like that. But this new bill, I'm going to see if I'm going to ChatGPT and see if we can get it condensed for you guys, so you don't have to sit here and hear. I was trying to do. So you have to sit here and help. Well, I might have to read it all because I was trying to highlight it all, but it all disappeared. But this is about Georgia, and like I said, I'll summarize it to my best knowledge as well. Hey, what's going on, Brian? That's a great idea. Thanks for joining. I think Brian, I believe you, Brian, you're one of a friend of mine on TikTok, I believe. I think this is Brian. I haven't been on TikTok in a long time because I haven't accepted the new rules and guidelines. So, but I appreciate you coming over here from TikTok. Thanks, man. He said, love the show. Thank you. I'm like, I know some agents get mad at me because I kind of, you know, be saying different things. And I just, the whole thing about YouTube and me doing this stuff is to be very transparent. So I appreciate people that come over, engage, have conversation, you know, just being a little bit more transparent with our folks. But yeah, like I said, throw these things into ChatGPT, Google Gemini, and get it to summarize things for you so you understand. So when it comes to this new HOA bill in Georgia, we'll go through it. If you guys were here earlier, they kind of stated basically what it is, because I don't want to keep you guys here forever on this Easter Sunday. But it says the Title 43 of the Official Code of Georgia, annotated relating to professions and businesses, is amended by adding a new chapter to the rule as follow. So the first thing that they added now is that every HOA in Jersey, every HOA in Georgia now has to be registered with the Secretary of the State. So this is what this mostly says, that it shall be unlawful for a person to operate a property owners association, which is a HOA, and this state pursuant to Article 6 of Chapter 13 of Title 44, which you guys will have to go and kind of read that in full because I don't want to bore you with all that information. But it says Georgia Property Owners Association Act, unless such person is registered under this chapter as a property owners association. It says no property owner association shall collect dues, issue assessments, collect fines or fees, issue liens, or initiate foreclosure proceedings on any lot unless such property owner association is registered pursuant to this code section. So now if you guys are in an HOA community as of come January 1st, 2027 in the state of Georgia, you should go and make sure your HOA is registered with the Secretary of the State of Georgia. If they're not registered with the Secretary of the State of Georgia and they're giving you fines, issuing liens, trying to collect assessments, any type of fees, and they're not registered, according to what I'm reading, I'm not a lawyer, so definitely go and have a conversation with a lawyer. I'm a realtor local to the Metro Atlanta area. I'm just reading this bill, and from what I am getting off of this information here is that if they try to do that, they cannot do that, and I would say you wouldn't have to pay it. But again, I'm not a lawyer. Get the lawyer to kind of look deeper into that. Brian said, yes, I try to catch all your replays when I can, but don't give up on TikTok. Thank you, Brian. I appreciate you catching the replays. Yeah, I got to figure out the whole TikTok thing. Yeah, I just got to read everything as far as the new rules and guidelines on TikTok because I haven't read it. So I haven't agreed to accept those conditions yet. So I have to read it. I'm a big reader, as you guys can see. And when you come over here to this channel and we talk, I read a lot, and it has to make sense to me before I just sign anything or do anything. Clark, don't rush whatever I missed. I will get on a replay. Okay. He said, don't rush through it. Don't rush through it. I'm going to do my best. I don't want to rush, but I also don't want you guys to be bored from my talking. But if you are here live and you want to comment inside the chat, let me know where you're located at. Let me know how you guys feel about HOAs. Like I said, there's a difference. Some people love their HOAs. Some people don't like HOAs. A lot of people that I'm talking to nowadays that call me or email me, they're basically saying they don't want to buy in the HOA community. They rather know HOA. And some people are okay. I have some clients that are looking right now in HOA communities. They're okay. The HOA annually is no more than $500 for a year. So you break it down monthly. It's affordable to them, right? I had a client that just purchased recently, and her HOA, I think it's like $70 something a month. So, and she was okay with it. Like I asked her several times, how do you feel with this HOA? And she was like, I'm okay with it. I said, because we can always look for a smaller HOA, a community without an HOA, but she's okay. So it just depends on you as a person, right? What do you feel is doable for you? Each property owner association shall file with the Secretary of State, which we talked about, registered on a form as prescribed by the Secretary of State that shall be signed by applicant who shall be authorized officer or a representative of the property owners association. Such form shall at minimum require. So they'll need to make sure the form says the name, the address, the officers of the property owner association, and that each registration statement include a financial statement of the property of the owner association dated no more than 1 year prior to filing. So they have to give that information as far as that financial for that for the HOA, and it has to be no more than a year. So they can't go back and dig in those other financials. They have to give a recent financial. Upon the Secretary of State determination of a property owner association compliance with subsection A of this code section, and unless the Secretary of State finds grounds for denial pursuant to Code Section 43-17-2. Secretary of State shall register such properties owner association, provide the property owner association shall be authorized to operate upon the following of the registration statement under paragraph 3 of the subsection A of this code section, unless the Secretary of State finds grounds for denial pursuant to the Code Section 43-17A2. The date of such filing shall constitute the effective date of registration statement. The Secretary of State shall immediately notify the property owner association of such registration. So again, this whole section is breaking down that the HOA has to register with the Secretary of the State of Georgia. Each registration statement issued pursuant to this code section shall expire on December 31st of each year, and each owner association they have to renew. So after every year, they have to renew, and they're paying a renewal fee of $100 every year when they renew. So again, if you are a current property owner or if you're buying into a HOA, you can, I'm guessing just because typically if you guys know how businesses work as well, you can go on to the Secretary of State of Georgia or any Secretary of State, depending on what state you live in, and you can see if this business is currently active and if they've been issued a license per se. So I don't know if this will be in the sense of a license per se, but you can see if they're doing it in accordance as far as every year that they're renewing. And if they're not renewing, but they send you a fine, an assessment or something, you can tell them like, well, baby, you're not up to code. What you're supposed to do as your HOA, you're supposed to renew it. You didn't renew. So I'm not taking on this fine or this assessment or whatever, because it's not in law as far as you following what you're supposed to do on your side and X, Y, and Z. So again, I'm not a lawyer, but I'm just interpreting what I'm reading. It says submit to Secretary of State by the date renewal application containing the information, which we talked about. What does it say? It says it's an event of a change of name, address, officers, or other change which materially affects the business and control of the property owner association. The property owners association shall within 30 days file an amendment registration with the state. The filing fee for that is $100 for renewal, annual renewal $100. Record records relating to a property owner association finances, dues, assessments, fines, liens, and foreclosures shall be subjected to such reasonable examinations by the representatives of the state, of the secretary, as the Secretary of the State may deem in the public interest for the protection of the public. So again, they're saying that the Secretary of State has to examine, review any of these assessments, any of these fines, any of these liens. So it's almost holding the HOAs more accountable in a sense, because most HOAs, particularly in the state of Georgia too, they had no one to hold them accountable. So if you guys are in certain HOA communities, I heard stories of, HOAs stealing money, HOAs charging excessive fees, HOAs hitting you with just random fees for no reason. And there was no way to kind of combat it. There was no type of regulation put in place. There was no one that the HOA had to answer to. So with them filing to Secretary of State and having to, that's almost like a person that they have to answer to. And they're the ones that kind of assess stuff. And again, we do know that there's always loopholes and everything. And we do know, if you guys know anything about, businesses and things like that, that sometimes when you call different divisions at the state, no one picks up the phone either. And it's hard to reach people. So if you can try to find like an email address that corresponds, or ask the HOA if they could possibly give you something like that, or, anything in those lines, that way you can possibly email as well, just to keep a written record in place outside of phone calls. A property owner association shall maintain for not less than 10 years at an office located in the state. So it's basically saying the HOA has to have records on file for at least 10 years. It says if not, it has no office in the state. Its principal office, all records relating to any dues, assessment, fines, fees, liens, and foreclosures. The property owner association or property management or property management company. So we have to make understanding of not only some HOAs have property managements that kind of help to facilitate things in those communities, but then also you have HOAs where just the neighborhood governs it, right? The community governs it. So they're saying both have to file with the Secretary of State, both have to keep those records on file for that 10-year period. And in regards to that, so it doesn't just affect, the management companies. So we'll scroll down to the 43.7a. Secretary of State by order may deny, suspend, or revoke registration statement of property owners association, may limit the fines, fees, liens, or foreclosures that a property owners association may collect or perform in the state, or bar a person who is an officer, director, trustee, or executive personnel, employee, or board member of a property owners association, and the Secretary of State finds that such association is in the public interest and that the officer, director, trustee, or executive personnel, employee, or board member has filed an application for registration statement with the Secretary of State. And then it says, and so it's basically saying that it has to be, the Secretary of State has to approve it. So just you filing it does not mean you can go about and just start being an HOA or have your association and just start handing out fees or fines or assessments. The Secretary of State has to approve said board, said HOA, said management as far as that HOA. It says filed an application for registration statement with the Secretary of State, which as of its effective date or any date after filing in the case of an order denying effectiveness was incomplete in any material respect or contained a statement that was, in light of circumstances under which it was made, false or misleading with respect to a material facts. Willingly violated or failed to comply with this chapter or a rule promulgated by the Secretary of State under this chapter, failed to pay the proper filing fee within 30 days. So that, again, they have to pay the filing fee, which we said, if this is still going back to that $100 annually or upfront when you first register, they have to pay that filing fee, or again, they become non-active. They cannot issue these fines, these assessments, these dues without that proper filing fee within that 30-day period. It says right here, it says may provide for the reinstatement or of the registration or the suspension of a fine or penalty at such time as the deficiency is corrected. Filed to comply with subpoena or order issued by the Secretary of State. It says the Secretary of State shall not begin a proceeding based solely on a factor of transaction known to Secretary of State or on before the effective date of registration statement, unless the proceeding is begun within 90 days at such effective date. And so this kind of just breaks down more. I'm trying to make sure we get into everything so we don't keep you here long. So this is kind of just breaking down more of that section as far as the property owners association doing stuff accordingly. Right here it says when the Secretary of State has issued an order denying, suspending, or revoking registration statement of a property's owner association, limiting the assessments, fines, fees, liens, or foreclosures that a property owners association may collect or perform in this state, or barring a person who is an officer, director, trustee, or executive personnel, employee, or board member of a property owners association under Code Section 43-17A-2, he or she shall promptly send to the property owner association a notice of opportunity for a hearing. So I'm guessing right here is saying that, again, I'm not a lawyer, so you can throw this in ChatGPT. It could possibly summarize it for you in the best way. But what I'm reading here is that you have to give them an option. These HOAs or management companies to they have to have a hearing. And wait, let me see. Is the HOA have the hearing or the property owner? Let me just make sure. Said Secretary of State issue any denial suspension. Okay, yeah. So it seems like the HOA has to have that hearing before entering an order refusing to register any person under Code Section 43-8-2. After entering of any order for revocation or suspension, the Secretary of State shall promptly send to such person a notice of opportunity for a hearing. So basically, again, saying that they have to have a hearing before such things are done. Again, like I said, if you want to understand it more in full details, get a more of an explanation, if you know a local lawyer that's willing to read it out to you as far as the state of Georgia, have them read this in depth, but yeah, throw it in ChatGPT, Google Gemini, it'll break you a little bit more. Notices of hearing shall be served. So it's talking about the hearing. We don't want to keep talking about a hearing. We understand they have to be by hearing. Let's see. I want to get down to different parts. Let's talk about at the hearing. Let's talk about different things about the hearing. And again, I'll put this link so you guys can read it in full if you want to. It's talking about the person or their attorney within 30 days. This is talking about a referee shall be approved. So this is talking about, getting that hearing done if they have to get a hearing, if they're not. So I'm thinking more of it is kind of gone into the sense of the hearing being in place in regards to those assessments, those fines, those fees. Like they have to have the proper hearing as such. He said, thanks, Clark. Enjoy yourself this Easter weekend, fam. No problem. Thanks, Brian, for tapping in. Enjoy yourself as well. Have a wonderful Easter Sunday. Like I said, after this, I'm heading to do a few things and I have an Easter dinner. That's why I popped on here earlier. But I appreciate everybody that just popped on and is watching. I appreciate you guys. Have a wonderful Easter as well. Enjoy yourself. All right, let's go down to, I want to go down to more of the fines and stuff and the fees. This is talking about as far as the members of the board for the HOA, different things like that. Where are the, I read some of this beforehand, so we can get these things right here, so we can jump down to these fines and these fees for you guys so you can understand this. And then I'll give you a condensed version too, a little bit condensed in regard to, like I said, just ChatGPT in it real quick. Where's the fines and fees at? I'm like, oh, here, right here. Here we go. It says right here in regards to Section 3, Code Section 44-3232 of the Official Code of Georgia, annotated related to assessments against lot owners as constituting a lien in favor of association. Additional charges against lot owners proceed for foreclosing lien and obligation to provide statement of amounts due is amended by revising subsection C as follow. So they have amended this section. Says, unless limited by Secretary of State pursuant to subsection A of Code Section 43-A-2, not less than 30 days after notice is sent by certified mail or statutory overnight delivery, return receipt request to the lot owner, both at the address of the lot and at any other address or addresses in which the lot owner may have designated to the association in writing. The lien may be foreclosed by association by an action, judgment, and court foreclosure in the same manner as other liens for the improvement of real property, subject to superior liens or encumbrances by any such court orders. Judicial foreclosure shall not affect the rights of holders or superior liens or encumbrances and to exercise any rights or powers afforded to them under their security instruments, which the security instrument, if they're stating it the way that I think they're stating it, that means like your mortgage lien, like the liens against your house, like your security instrument, the deed, all those things. All right. Again, talk to your lawyer to make sure that I'm correct. I'm just a local realtor in Metro Atlanta that likes to read and understand everything that's happening in the housing. It says the notice provided for in this subsection shall specify the amount of the assessments then due and payable together with authorized late charges and the rate of interest occurring thereon. No foreclosure action against a lien arising out of this subsection shall be permitted unless the amount of the lien is at least. So before it used to be the lien had to be at least $2,000. Now they have it in place that it has to be at least $4,000. And no portion of any liens or fines shall be applied by an association to the cost of foreclosing against a lien. So when I'm looking at that and I'm reading this, it's basically saying that any fees that is outside of actually paying that HOA amount due monthly, they can't be added into the $4,000 for them to foreclose on your house. Back in the day, the HOA in the state of Georgia, after $2,000, they were adding those assessments, those fines, those things. If it equaled $2,000, they could foreclose on the property. And on top of that, not only could they foreclose on the property, they could also turn around and purchase the property. The HOA could actually buy the property. So this new bill put in place that takes effect January 1st, 2027. So again, if any of this happens now, you guys can't run and try to, do it now. But in 2027 to January 1st, it should effectively take place. Governor Kemp should sign it into law. And once they do so, that this will, make sure your HOA is registered with the Secretary of State. So they have until that January 1st to be registered with the Secretary of State. And then also, I don't know if this will affect anything predated to the law. So if you already have, $2,000 in fines, like HOAs or whatever, I don't know if this will predate, if it'll go back and what they call it, reactive, retroactive, I guess. I don't know if it would go back to that day or if it takes place come January 1st, 2027. Again, this conversation you can have with a lawyer or type it in ChatGPT, Google Gemini. That's what everybody do to me nowadays. I'm like, even my clients that I work with, they ChatGPT and Google and Gemini, everything. When they'll ask me a question, then they'll go around, they'll put it in there, and then they'll hit me back like, oh, you was right, what you said. I'm like, yeah, I'm not lying, but I get it. Want to check everywhere and make sure people are not telling you any fibs. But so basically, again, the fines or those fees, according to this, they can't add that into the $4,000. Like it has to be the HOA to foreclose. And it says neither the association nor any member of the association or entity associated with the association or family member or of any member or any owner, member, officer, or director of any such entity shall have the power to bid on the lot at any foreclosure. So remember, guys, what I told you earlier, that these HOAs, members of the HOAs, family members, anybody they were at these auctions and they were bidding on this property. So if they said, hey, you know, we're hitting you with the foreclosure, $2,000, and let's just say everything accumulates to, after taxes and fees or whatever they kind of put in there, accumulates to $3,000. The HOA would come bid on it, take it, and they basically took your house for $3,000. So it's saying that they don't have the power to do that no more. The lien for the assessment shall lapse and be of no further effect as to the assessments or installments thereof, together with late charges and interest applicable thereto 4 years after the assessment or installment first began due and payable. All right, so that is the end of that in regards to this new law and this new bill. So again, this is SB 406. If you are in the state of Georgia and you want to get more around this law or more understanding, either talk to a local, like I said, a local real estate attorney, or you can also, like I said, throw it in ChatGPT or Google Gemini if you feel like you can't afford that attorney, if they don't have one in your family. And I will link this below in the video and the notes so you guys can be able to read this in full outside of what we kind of talked about. And then real quick, I'm going to give you guys a quick condensed overview. And again, this is just based off of the AI online of what we talked about today outside of the HOA and everything. And then we're hopping off of here and you guys can have a wonderful, wonderful Easter. So again, Georgia Senate Bill 406. It's a little bit bigger for you guys. 406, known as, so this bill is known as the Georgia Property Owners Bill of Rights Act. It was passed April 2026. So literally, as I'm speaking right now, we are in April of 2026. This bill has come to a pass. According to this, aims to increase oversight, transparency, and accountability for homeowner associations, as we talked about it. It says mandatory that they have to register with the Secretary of State. Associations that fail to register as a prohibited issue, they cannot issue again fines, initiate any foreclosures, place any liens against the property if they do not register with the state Secretary of the State of Georgia. Again, this comes into effect January 1st, 2027. HOA oversight. Secretary of State is assigned oversight, creating a process for homeowners to file complaints and have them reviewed by hearing. So again, you as a homeowner can go to the Secretary of the State and you can file your complaint with the Secretary of State. This again is supposed to be the Secretary of State is basically in place to become a regulation type of system to regulate these HOAs and give you a place as a homeowner to file a complaint and also get your complaint heard if you currently are a part of an HOA in the state of Georgia. Again, comes into effect January 2027. So you will be able to reach out to Secretary of State and be able to file those complaints in regards to with your HOA, and then you'll be able to have a hearing. And again, the HOA itself will be a part of that hearing. They'll have a referee in place. They'll have, people to kind of be in place as far as, I would say, I don't want to say arbitration, but it's more of a place to kind of mediate. I'm feeling like it possibly might be. Foreclosure restriction says the threshold for a HOA to initiate foreclosure, again, due to unpaid, has rose to $4,000. It used to be $2,000, and it excludes fines and fees. So they cannot add the fines and the fees inside of that amount and to try to issue a foreclosure on your property. Protection for homeowners. The bill prohibits HOAs from bidding on the properties. Again, as we stated, HOAs can no longer bid on those properties that are foreclosing. Before, they used to be able to bid on them and take them over. They cannot do that anymore. It says they are foreclosing. It says it also requires that homeowners payments are applied to regular assessments before any fees or special charges. And then again, records maintained. HOA is required to maintain at least the records for 10 years. So that is a short overview condensed through the AI, but I also wanted to actually pull the bill out so you guys can see the full bill. And again, I'll link it below. Thanks for joining me this Sunday. I know we were earlier. If you're new to the channel, don't forget to subscribe to the channel. Also like the video as well, because it helps us move through the algorithm so more people can get this information. And again, if you haven't subscribed. And typically after some of these videos, they'll have a shooting star below the video, which is called a hype button. You can hype the video to help push us through the algorithm a little bit more. It shoots us through it quicker. And I will also, like I said, clip the ending part as far as pertaining more to Georgia. And I'll create a separate video that we did from this video. And also, if you are looking to purchase or sell in the state of Georgia, you can reach out to me at any time. And if you're not only in Georgia, but you're outside of Georgia, you can reach out to me as well. I have people, everybody reach out to me. I can put you in contact with other realtors throughout the world. I'll put my information in here real quick before we leave. So if you want to get in contact with me, because sometimes I forget to put it inside the caption below, but you can reach me on my business number is 678-995-3170. This is a business number, so give me some time to get back to you. It's not my main cell phone number. And then also you can reach me via email at my business email, which is DClarktherealtor@gmail.com. All right. So you guys have a wonderful Resurrection Day, Easter Sunday, and I will see you guys next Sunday. Take care. Bye-bye.